can you tell from your policy that if something happens, it is either included or excluded in coverage?
Chairman, the answer is no. It's very difficult, and not just the cost of the policy, but now, we retained an attorney to help us understand what the policies were. So now you have costs on top of the policy itself to understand what your policy covers and doesn't cover.
What do you think your policy covers? What events might happen to your company that you feel pretty certain are covered and ones that you have doubt about?
I think some of the costs associated with, let's say there was an attack and there was equipment potentially that was compromised, that those costs would be covered. I believe costs associated with notification and things like that would be covered. What's more unclear is what's not covered. And, we keep hearing, well, it's claim specific. Well, you don't know what your claim is going to be until you have that, and hopefully you never have that. So that's a little bit of the challenge in understanding.
I don't know your business, but would you be subjected to litigation by those damaged by the cybersecurity, your customers or clients?
Possibly. We provide services to the government as well as the private sector, and I think there's exposure to, or we hold information that is perhaps sensitive, business sensitive, et cetera. And, in terms of what we're seeing in our government contracts, it's really a mix. Some agencies are more focused on cybersecurity and including language in contracts that address that. Others are still not, or don't have anything that speaks specifically to cybersecurity and just speak to security in general and protecting the government's information. So I think it's really right now just a mix.
You've heard Ms. Sage's testimony plus her response to me. My question, I guess, maybe to the rest of the panel, are the policies any more standardized now than when Ms. Sage described what she went through with different companies? Is it still, Mr. Menapace?
Yeah, no, there is no standardized policy language. You may be aware there is an organization called ISO, the Insurance Services Office, that does provide standardized wordings for a whole line or many lines of insurance. And ISO recently did issue cyber policy wordings. However, I know of no insurer who has adopted the ISO form, and I know of no insurer who plans to adopt the ISO form. So what we have out in the marketplace are 40 or 50 different policy wordings for these coverages. And I have to say that this is an area where brokers are important, and this is where they earn their money, to help the insureds assess their own risk and then match those up to the different protections that are being offered by, among the insurers.
Do agents know, do the agent in my hometown know if a businessman or woman came to him or her, would they be knowledgeable about this topic?
Certainly the big insurers do. The smaller, the big brokers do, certainly. The smaller brokers, if they have taken the time to educate themselves, are valuable. And certainly there's a group of smaller brokers who I refer clients to for this very reason, because they've taken the time to understand the coverages, and they take the time to go into the businesses and assess what their risks really are, rather than just pulling something off the shelf and saying, here's cyber insurance. With,
you say 40, 50 companies, there's not been the market is not yet sophisticated enough to say these are the companies that have the best policies? Or have we narrowed this down to those who know what they're doing and those that don't?
And I'm even underestimating the 40 to 50 companies, because each of those companies offer different policy coverages depending on the size of the business, what sector of the business they're in, and what their needs are. So the matching up of the risks and the needs will continue to be a problem, and it's something that certainly large businesses look at extensively, but with smaller businesses, this takes resources to do this kind of analysis, and it takes resources on the insurance companies as well to do individual underwriting. That's really hard to look at individual small businesses one at a time.
And Mr. Chairman, the data that I have says that 5 or 6 carriers write the coverage on a primary basis, and those 5 or 6 carriers write approximately 70% of the gross written premium. So while there's 40, 50 markets who maybe offer the coverage, it is really sort of centralized with those markets. The other thing I would say on your coverage question is that this is where the history of the product becomes useful in understanding what may be covered in the event of a claim. So it's designed originally to respond to third-party liability costs arising from a network breach or a privacy event, and now there's been the inclusion of first-party costs for privacy breach remediation and response, which can include some business interruption costs in the event of a network security breach. But that's really where it stands right now.
Could I just make an additional comment? Because I don't want the committee to get the perception that all these insurance policies are different. Some are covering one thing, some are covering another. That's not actually the case. Yes, I absolutely agree. The actual policy language is different from one insurance company to another. But if you really boil it down, the specialist policies are trying to cover fundamentally 3 things. Number 1, costs of dealing with the breach response. Notification, forensics, credit monitoring, PR, that type of thing. And then the other 2 buckets really fall into liability coverage, to your point, Chairman. The second one being privacy regulatory action. You're sued by a regulator, and it's the cost of defending yourself against that and any civil fine that you could be hit with. And then finally, the third one being a civil action, for example. So a suit in class, it could be from the banks, it could be the individuals who own the data. So really, most of the policies in the marketplace are trying to address those 3 things. Yes, they're doing it sometimes in different ways. Yes, there are exclusions here where there might not be in another, and a broker has to navigate that on behalf of their client, and that's where one broker is better than another. But I think it's important just to say that although it's not commoditized, and it's not commoditized because, frankly, it's still a new area of risk, there is some sort of streamlining in that regard.
On a national database, on that concept, there's some who have general concerns about the federal government running that database. And then if you reach the conclusion that they should, then the question becomes, who is that? Is that the Department of Homeland Security or Treasury? Is there a public-private partnership? Is there an outsider that could effectively run a database that we could then rely on?
Well, I can comment. The Department of Homeland Security has had 3 different working groups over the last 2 years and now has commenced another group. We've had 1 meeting so far. So we're just starting off because your questions are exactly right. These are the details that need to be ironed out, really. So in theory, the idea of a data repository is a good one, but the question of ownership, who has access, what kind of information would be put in there, how would it be anonymized, and then how would it be made most useful to the insurance community and the non-insurance community, these are all the questions that we have on the table right now. It's part of the working group. On
information sharing and analysis centers, does the insurance industry have one?
Well, we don't have one centralized place for this line of business. So Mr. Menapace mentioned ISO. ISO is an organization that has information about a multitude of insurance. But as I mentioned in my testimony, this line of business is something that is largely purchased by specific industry segments. So we don't have data for every single company, irrespective of industry, irrespective of size. So we just don't have that breadth of data that way. And so we're unable to really create those trends from ISO or anywhere else. So individual insurers are relying on the data that we have about our cyber customers, and we can use information and extrapolate it from general liability and other lines of business where we have experience, but that's quite fragmented.
Ms. Sage, do you participate in an ISAC?
Not officially. And I think one of the challenges, I don't know if it, for a lot of small businesses, is we don't fit neatly into specific industry segments. And so sometimes, I know that was part of the discussion around the ISALs, of which ISACs are considered a type. But, just as a small business, our focus is, we're just on the ground. We're really just trying to, get new customers, keep our customers, et cetera. So some of these things that, that require a lot of resources, participating in working groups, attending meetings, these are things that just, typically, we just don't have a lot of time and resources for.
Senator Gillibrand and I have discussed legislation that would create a tax credit for the participation in an organization like that. Does that have any appeal to you or to the industry?
Absolutely. I think, as I mentioned in my testimony, even things like the voluntariness cybersecurity framework. If insurers could even consider that, the other ISO, the International Standards Organization, that sometimes is used as a way of understanding what emphasis an organization has, whether it's quality, risk management, et cetera. And so using something like the cybersecurity framework could be a factor that they could, so that we don't have to now worry about what specific questions do we have to ask this company or that company. At least it could begin to move us in that direction. And so offering incentives for small businesses to use the framework, for example, would really be helpful.